speak with you further. Once again, our phone number at the Greenville office is 1-800-588-7526. Now let's go back to Talking Money to answer more of your questions.
And we've only got about 8 minutes left in the program here on Talking Money. So glad you're with us. And if you got a question for me, I would probably at this point send it to Mike@TalkingMoneyRadio.com instead of trying to call in to get and squeeze it in the last few minutes that we have. But talking about retirement income options, and I've covered a lot of different things. Got a little carried away in the annuity part there. So went a little longer on that third segment than normal. But some other areas that I know people have had some great success with is real estate. And I think you've got to be really careful with the real estate. I know of people who have bought real estate, rental income, planning on getting that rental income in, and they get their first tax return and they see how much they saved in taxes because the depreciation deduction that they got to take, and not realizing that eventually they're going to have to pay taxes on that depreciation deduction when they sell that property, unless they keep holding that property until they die. And right now you still get a step up in basis at death for that property, so you can eliminate the income taxes at that point in time. So I don't know how many people like that strategy to save taxes. You got to wait till you die to save it. But you still need to buy real estate with the thought of how much that property is going to go up in value over time. But the rental income can be nice. You just have to have the other hassles. So you might have a good company that maybe will take over as the real estate property manager, and you can pay them 10% or whatever you're going to pay them, and they take care of all the phone calls and so forth. You don't have to worry about it. I hear as many cons as I do pros on real estate, and the number of people who have gone back into a piece of property after someone left and the people just trashed the place, and they had to spend so much money to get it back up to speed again to where they could even rent it again. So having the type of renters that you have, and if you get lucky enough to get a good renter that takes care of the place is almost as if it's their own, and they do that for a long period of time, that's certainly a real blessing for you to get that. Just be careful about buying the real estate and not setting money aside for the eventual repairs. The roof needs to be replaced. The HVAC needs to be replaced. The water heater, the carpet that needs repainting, and the lawn that needs to be done. All that kind of thing that you need to make sure that rental income is not pure profit that you're getting in. You got to pay taxes with it. You've got to prepare for all these other down the road expenses, just like a homeowner does. So that eats into your net profit, and income rates or rental rates are going up. So for those who already have the property, it works out to be a real boom for them, because they're going to make a net profit even higher because they can increase the market rates based on what's going on today. Private credit, I think it's another excellent way to get some money for those who are wealthier, at least have some higher net worth. Let's say at least $1 million. We can get into some private credit, which is essentially loaning money on the private side. There's companies that want to avoid the hassle of issuing bonds, of doing the things they need to do to go through a bank, and they're willing to pay a little bit more rate. So there's some really decent, I think, really good returns coming through the private credit. There's a liquidity issue with many of them. You can't just get it in and out like you would a bond. But you're offsetting that, I think, with the extra liquidity or extra diversification in that particular type of asset, and then you want to get, because of the limited liquidity, you want to get the extra return, as opposed to annuity, let's say, that gives you limited liquidity, but you don't get the extra return for that, in my opinion. Private equity is another one. This typically is going to be for somebody that has a higher net worth. I would say, a couple million, probably 3 to 5 million asset size and up. If you want to diversify away from the domestic stock market, it's a great way to do that. And so you're investing in these companies. There are a lot more private companies than there are public companies. So there's some opportunities there to invest in some other companies, and you invest still in groups of them. So a little like a mutual fund, in the sense that the investment you make may be investing in 100 companies, 200 companies in this pool of investment that's going. So you're diversifying inside that pool. But then you're restricted on liquidity when you can get the money out, because obviously you're investing in a company. You invest in that company. That company wants to use that money for a long period of time to help grow the company and make it back. So yes, there are some restrictions there, but there again, you're hoping long term with that part of your money that's in the private sector. that you can leave that alone, and you'll plan to make more money, at least as much as you would in the public sector, if not more, because you had to put up with that liquidity issue, because you can't just get the money in and out. Gold, I'm talking about physical gold here. Remember, that's not for income. So if you buy gold and think it's for your retirement, well, it's not really for your retirement income, because there's no income that comes from gold, or even in gold stocks. I mean, typically the company's not paying dividends. That's not why you buy gold. People typically buy gold because it's something that they want to have as a hedge against, they think, inflation. I'm not convinced that it's the best hedge against inflation over time, because I've been in this business a long time and I've seen multiple times that inflation was taken off and gold didn't. I think it's more of a fear factor. So if you have fear then about everything collapsing, then you say, okay, I want to buy gold. But there's always that logistical issue with gold.